Hello and welcome back. Hopefully you enjoyed the short break. As they say, time flies when you're having fun. And if so, the next 50 minutes is going to fly by. This afternoon is all about markets and trading, and we're kicking it off with our exchange panel, safeguarding our markets, technology and supervisory approaches. My name is Bradley Maclean, and I'm a co-founder of Regulation Asia. Now, in a market environment characterized by heightened volatility, faster trading, and greater retail participations, exchanges around the world have prioritized risk, resilience, and integrity of operations. This panel is really structured around delving into how exchanges are leveraging technology to preserve market integrity and guard against misconduct while ensuring issuers, market participants, and other intermediaries comply with all of the applicable regulatory requirements. The goal is to hopefully deep dive into surveillance approaches, supervision of market participants, as well as listing compliance and other measures around governance and controls that are in place. So we have a lot of ground to cover. So without further ado, I'd like to welcome our distinguished panel of experts, Mr. Julian Hashim, Chief Regulatory Officer of Bursa, Malaysia. Welcome, Julian.
Hi, good afternoon. Hi, Brad.
Mr. David Kwan, Head of Nasdaq Market Surveillance Smarts Asia Pacific with Nasdaq. Welcome, David.
Thank you, Brad.
And the lovely Miss Grace Mock, Senior VP and Head of Member Supervision with SGX RegCo. Welcome, Grace.
Thank you. Hi, Brad. Hi, everyone.
Excellent. Well, where to start? I mean, let's start from, I guess, the original premise, which was really around market integrity and guarding against misconduct while ensuring, market participants and intermediaries as well as insurers really meet their regulatory requirements. With this in mind, Julian and Grace, it'd be really great if I could get maybe your thoughts on your respective businesses, whether that's SGX or Bursa Malaysia, the current priorities and focuses. Julian?
Thanks, Brad. I think what I'll start first is just a quick touch on the third Capital Market Master Plan, which was launched in the second half of last year by the Securities Commission. In that third Capital Market Master Plan, it talked about three desired outcomes: being relevant, being efficient, and being diversified. And that's underpinned by three key development trusts. And in tandem with that, there were three key regulatory trusts. Now, interestingly, in one of those three key regulatory trusts, it talked about embracing the digital age. And in embracing the digital age, that comprises of three pillars, right? To expand RegTech knowledge, catalyze RegTech innovation, and encourage RegTech adoption. So given on that context, there are three immediate priorities which we as the exchange would like to undertake in line with that third Capital Market Master Plan. The first thing that we intend to do is to create that greater awareness and deeper appreciation of RegTech among our participants, right? This includes our supervisory and outreach programs. If I've not mentioned it before, 90% of our member firms have implemented surveillance solutions, but that's not the end of it, because there are issues with a company adopting technology and processes that need to be understood and dealt with. Some at that industry level, and we did conduct continuous engagements with our stakeholders, especially the brokers, and understand their needs and their barriers to RegTech progression. So that's priority number one. Priority number two is to actively participate in meaningful collaborations, and this is something very close to me. Meaningful collaborations and engagements is where that dialogue, that initiatives are harmonized and aligned to RegTech development and growth and sustainability of it all. I mean, there needs to be an ecosystem. We create safe spaces, sandboxes, if I may use that phrase, for experimentation, testing, and scaling of whatever solution that can be worked on. I mean, with that collaboration and work together with the Securities Commission in this space, we could actually then better complement the third Capital Market Master Plan of embracing the digital age. Last but not least, I think this is on the tip of everyone's tongue, is the strengthening of cyber resilience. I know technology can be both an advantage and disadvantage. There is a linear the observation between the two, and reliance on RegTech and the potential risk of cyber threats and breaches. I think the more you rely on technology, the more vulnerable you are to technology risks, cyber risks in particular. So there is a constant emphasis on cyber resilience between ourselves and our brokers. We have already a structured program in place to ensure cyber resilience, including with our member firms. But there's that continuity that we need to create emphasis on greater cyber resilience with greater technology adoption. They must be well prepared, equipped to deal with any situations, and cyber threats, it's on top of that list, Brett.
Okay, so if it boils down to it, sounds like it's preparing for the digital age, creating safe spaces, and the cyber kind of resilience component. Is that correct, Julian?
That's right.
Excellent. So, I mean, Grace.
Yeah.
No, it makes sense. Grace, from your perspective, I mean, with the SGX, where are the priorities and focuses from your perspective?
For us at this point in time, I think the immediate focus would be on the markets, basically to make sure our markets continue to be resilient, as the threat of disruptive events, right, affecting price discovery and market integrity has really grown quite significantly, and extraordinary events now seem to have become a norm for us. Cyber is also the other key thing on our agenda. We've been working with brokers on drills to make sure we all collectively build resilience in this area. And I think the other focus would be on partnering our brokers to make sure we scenario plan, we develop a playbook, and we run more drills, to be able to manage potential defaults as well as dealing with cyber threats. And as and when we see a potential problem, that's when we look to issue advisories, guidelines, and even share case studies. So, for example, we recently shared guidance on stress testing. We issued a financial and regulatory dashboard to share common rule breaches, as well as financial condition of our members vis-a-vis their peers. And of course, that is on a no-name basis. And if some of you may recall, at the height of COVID volatility, we also issued algorithmic trading guides as well as credit guides to our brokers. So I think some of these event-driven sort of advisories will continue to be our focus.
I mean, David, you're very uniquely positioned. I mean, you're working with institutions and platforms across the region. I mean, where are the other areas where you're seeing, exchanges kind of prioritizing or focusing their efforts?
Oh, thank you, Brad. So touching upon some points mentioned by Julian and Grace, and also from your introduction, because Nasdaq, as you say, is very a special position where we work with banks and brokers, exchanges and regulators dedicated for anti-financial crime solutions. So what we have observed recently is increased retail participants. Right? So increased retail participation may be because of ease of access, the ability for people to connect and trade, and also people working from home, maybe that's also increased in trading activity, and market volatility brings in a lot of additional investors or participants into the market. So with this, what we have seen is perhaps behavior differences between retail participants and the more institutional trading activity. So with that, our alerts and the way that we monitor trading behaviors and suspicious behaviors needs to be fine-tuned. With that said, something in particular for Hong Kong is the introduction for the investor identification regime. So that's something coming into place very shortly. So with this is actually additional data that we can make use of, which will increase the accuracy of our alerts. A lot of the challenges that we see from our customers is the accuracy of alerts and to reduce false positives. Because sometimes when we don't know who the end participant is, we may not be targeting suspicious behavior or malicious behavior dedicated per a particular trading group. So with the ability to identify the end participants, we can actually cluster and study the behavior patterns of different investors, participants in the market, and actually fine-tune our alerts and have parameter classifications dedicated to these various participant clusters for increased alerts accuracy. So that's one thing that we are working with our customers on. Definitely a very interesting area to increase the accuracy of our alerts and to apply more focus so that the surveillance team have that information at hand and be able to process the alerts that comes in. So ultimately the markets always continue to evolve and change. And so we've actually seen new products being introduced as well. So we've seen the tokenization, digital assets coming into play as well. So we've been working with a number of our existing exchange customers looking into, I wouldn't say any specific tokenized products, but we are definitely working with them to study if they were to launch such products, what types of monitoring we need to have in place. So this benefits the entire surveillance community that we provide. The knowledge that we're studying with our exchange customers, we will share and have that capability within the system for our banks and brokers, and also for our regulated customers. And lastly, I just want to mention definitely something that is already happening is the carbon credits and future trading. So that's definitely a growth area. With that, there is an interesting potential for cross-border trading activity for these instruments. Say, for example, in Asia, we have Singapore, Malaysia, Indonesia, so closely related. These are neighboring countries. There is a potential for these countries to be linked up and actually trading. So that's another challenge from a regulatory perspective, from an exchange perspective, how we monitor across jurisdictions. So that's something that we are working with a lot of our customers on.
A lot to unpack there. I mean, it's quite interesting how you've mentioned all of these different kind of instruments and products that you're seeing rolled out across the region. Julian and Grace didn't actually delve into any particular instruments or products that they're looking at, but more holistically looking at, I guess, the underlying technology and digital transformation seems to be the theme there. I mean, David, from your perspective, I mean, how is the progress in terms of adoption for technologies for all of this monitoring and screening, and where are you seeing most of the bottlenecks?
So absolutely, the transformation, the evolution never stopped, right? With a lot of what we do is very much tied in with the new products that comes in, and our technology advancement is based on what we have proven and tested in the market. So take artificial intelligence and machine learning, for instance. Nasdaq has implemented machine learning into our alerts processing for a number of years now to help our customers to really process these alerts and analyze these alerts, create models that assist the users in quickly triaging and identifying risk areas in the market. So today we continue to build and expand on that. So what makes a difference in the ability to do this is to be able to scale the system. A lot of the machine learning and artificial intelligence, the bottleneck is with traditional installations where we have servers already installed, and it's very hard to scale these up. It's very hard to grow the hardware infrastructure. But with the implementation using cloud technology, for example, Nasdaq has partnered with AWS. This allows us to scale up the solutions very, very quickly, up and down, depending on the needs of processing power. With artificial intelligence and machine learning, it's very, very heavy in terms of processing resource requirements to crunch data. So that now it's very, very easy to deploy it on the cloud, and we have that resource available so that we can do that processing and really build upon what we have now. So we already have solutions deployed in production, working with our customers, but we continue to explore and prototype and build upon that. And so that just really, at the end of the day, when we can work with our customers to build something, it gets shared across the entire community. So definitely it is not without its challenges. And one thing I really want to highlight is with the growth in social media, that's something of a very particular challenge because we've seen potential ramping of stocks purely based on influencers posting something on social media. This gets the difficulty is educating retail investors. So we've seen the growth in retail investors. So this is something that is very difficult in terms of protecting investors against malicious behavior, people manipulating the market purely for their own personal gain. So how do we go about protecting investors? So that's a challenge that a lot of exchanges and regulators need to have a lot of questions on.
The social media angle is actually quite interesting when we start looking at the investor protection, but just taking a step back, right, and looking at the underlying technology. I mean, Julian, we were talking about this the other day around kind of your focus is not necessarily as the exchange, but it's really worth getting the technology adoption across your members themselves. And then obviously some of the largest firms down to some of the smallest firms. I mean, from your perspective, how is the progress and where do you see that the challenges are in terms of, the technology adoption and what are the expectations?
Well, it's always down to a business case for most people, but RegTech is a cost center that one needs to understand. And in my mind, I think that generally the two barriers in inhibiting or adopting RegTech. Number one, perception is cost of entry is high, whether it's technology, but I think one mustn't lose focus on having the right people to make that evaluation and assessment needs holistically first. So there needs to be that initial hire of people to look at that and then come up with solutions or steps that one should take in how you want to adopt your RegTech moving forward, whether it being the brokers or Bursa itself. The other point that I think we need to make is the spending on, I would say infrastructure, but basically retraining your current workforce. Because one mustn't forget that, the adoption of technology doesn't replace your skilled officers. It complements a person. So that's where we talked about earlier about collaboration in a sense. And that's collaboration not between entities and all that, but it's also collaboration between humans and machines. We see that whether it's Schumacher and his F1 car, we could give everyone the same F1 car, but nobody can actually drive it the way he does, right? So that human touch is essential, right? And only now we hear about semi-supervised machines learning algorithms, handling certain cases in courts, which makes judgments which traditionally have been necessary that lawyers and judges to actually look at. So even the most cutting edge technology will fail if the humans using it are not trained or ability to actually operate it. So that's something which we share with our brokers. Get the right people in place. Same thing with adopting and Bursa itself. What's the other side of the coin? If you don't do anything, it's status quo, and you can't solve these modern problems with ancient swords, if I may say, given how we progress with the market and how people are trading, and especially taking care of our retail investors. I think that's something we must be very careful and be mindful of as well.
I mean, it's interesting how you're, in the discussion around technology, you're really honing in on it is a balancing act between, implementing new technology and kind of the human component of that. I mean, Grace, we've spoken about this before. I mean, you obviously see technology as a major part of your surveillance and kind of supervisory approach. I mean, for you, how has this changed or reprioritized kind of what you were doing before?
I think essentially we're building on the initial adoption of AI, which already generated very high quality alerts, surveillance alerts. My colleagues in surveillance are continually fine-tuning these alerts to increase their sensitivity to deal with changing market conditions. I mean, we've seen a major war, we've seen major shocks, and introduction of new asset classes as well. So that's definitely one area of focus, fine-tuning alerts all the time continually. And the other key area of focus would be monitoring our brokers. Given current climate, broker controls the financial condition that's really core to our business, and in fact, even more important under the current climate. So to stay ahead, what we've done is recently we developed tools to analyze our members' financial as well as the exposure data more efficiently, and stressing them and sharing those stress data with our brokers to take any early preemptive measures. And as technology advances, we're also looking into more ways that we can enhance these monitoring tools for greater predictive analysis. And also as part of our RegCo digital journey, we've recently introduced a member portal for regulatory submissions, as well as a default management module that sits in this portal that could be deployed in a remote event of any broker default.
I mean, yet again, going back to the idea of looking at the adoption by the smaller members, I mean, as a platform, I mean, how are your attitudes and expectations towards the use of technology evolving on the exchange, especially when it comes to those smaller members and institutions?
I do see a general trend that most of our brokers are leaning towards greater adoption of technology, whether it's to improve customer experience, to streamline workflows, or to scale up their operations. And we also see in the areas of client account opening and surveillance. Insofar as surveillance is concerned, we don't advocate the use of any particular systems. It can be an in-house developed solution or a vendor system like Smarts. But depending on the model and the skill of the business, as Julian said, it's down to a business case. So we very much believe in that. But we do encourage our brokers to deploy solutions that are efficient and effective in dealing with voluminous amount of data. So while technology can play an important role in advancing detection mechanisms, as what was mentioned, I think human resources are equally vital. So while we can train machines to do things faster, process larger amount of data, we do need to invest in human capital, which is why we're also closely partnering with our members to escalate their trade surveillance capabilities. And some of you may recall that we've provided guidance to our members in the earlier series of trade surveillance handbooks and collaborated with our regulator, the MAS, to jointly publish a trade surveillance practice guide on do's and don'ts. And we also issued a surveillance dashboard to help our brokers.
I mean, okay, so that makes perfect sense. I mean, I understand that you're technology agnostic, but there must be some expectations that firms are getting more and more sophisticated in what they're doing, that they're gradually adopting more and more, sophisticated technologies. Would that be right?
I think with the introduction of more and more new tools, there are expansion of use of technology into the other areas of business, whether it's in operations, whether it's in finance, etc., or even human resources. So definitely with introduction, there is greater expansion.
Julian, I mean, same question to you in terms of your expectations around the adoption of technology. Is that evolving?
Yes, I mean, no doubt, right? The pandemic turbo boosted the adoption of technology for many firms, whether it be our member firms or HR, solutions and things like that. I mean, throughout the years, we've come up with initiatives to guide our member firms to higher self-regulatory conduct. But we allow that flexibility to make sure there's innovation. We don't prescribe things, but we give them a general set of guidelines. And in many of these initiatives, we take cognizance of the current emerging risk faced by industry itself. So, I mean, 2017, there was a little more emphasis on electronic trading, where we embarked with a market integrity program, which included a symposium for board directors of our member firms. There were trainer workshops. We had an industry communication on supervising and monitoring of electronic trading. These are the things that we did, just to educate, provide some advocacy, initiatives, and then give that flexibility to our member firms as to how they would like to approach this self-regulatory conduct itself. That meaningful engagement, I mean, there are also surveys which we carry out, understand the areas which are of concern and where certain gaps that can be closed itself. By speaking to various member firms, we then share these key themes with them. So there's actually cross-sharing and everyone learns from each other. So those who are below par will step up, perhaps, and those who are seriously inadequate, we expect them to reassess, revisit their risk processes and policies and procedures and things like that. I mean, there are maybe two things I could also share. 95% of our equities trading activities on our exchange are monitored through automated surveillance systems at the broker's end. right? But it doesn't end there itself. The brokers must remain vigilant to ensure that the system remains robust, the staff are well trained, possess the necessary competencies and skills to effectively discharge that duty. And secondly, second point, and similar to what Grace had mentioned, we are digitalizing the regulatory submissions and building a trend analysis capabilities as well. So we too in 2019 launched a web-based e-reporting platform for intermediaries, similar with what the SGX has done. So it allows for electronic submissions, requisite periodic reports to exchange and things like that. Right?
Excellent. I mean, Grace, we've previously talked about your dashboards that you're making available to members. As I understand, is the surveillance dashboard. There's a financial regulatory dashboard. Can you tell us a little bit more about that?
Well, the surveillance dashboard basically shows the raw alerts that are generated by our SGX surveillance system. So it captures the exact details of which dealer was involved, what counter and what time, so that member firms can look at those activities, review them internally, and discuss whether to curb any unhealthy activities early. So that's surveillance dashboard. Insofar as the financial and regulatory dashboard, that dashboard shares common rule breaches that have been undertaken or that have been committed by our brokers in recent times, and the financial condition on a no-name basis of our brokers vis-a-vis their peers, so that if they were to adopt early action of whether it's building up liquidity or getting their head office to channel funds early to them, are some of the considerations or actions that they can adopt after looking at those dashboards.
Excellent. David, we talked about this also previously. Bad data in equals bad data out. What happens when there is a data problem? From your perspective, what should firms and members be doing to remedy these types of issues?
From our perspective, it's not necessarily bad data, but more from the point of opaque or incomplete view of what is happening in the entire marketplace. So there are many factors that influences the price of any instrument, and so from our perspective today, the marketplace are very standardized. So data format is not so much a bad data problem. It's more, hey, we want more information. Hey, we want to take in as much as we can to get more and more accurate view as what is happening, what is taking place. So take, for example, malicious trading activities where groups of potential accounts or participants are colluding in the market, right? And this is something that, from a surveillance standpoint, we can see the trading activity, we can see the order book activity, but how do we actually identify that there is collusive activity happening in the market? So this is more behavior analysis. So this is something that we're working on in terms of enhancing what we have. We have a fairly good model at the moment, and taking into account all the various metrics about the frequency of order, the size, the price, the aggressive trading behaviors. So we're able to fill in the blanks and get a good picture of potential trading relationships. But I want to highlight one thing that I previously mentioned about the social media aspects of how this comes in. It's a very, very difficult challenge because we have very regional specific social media. They might be using the same platform, but it's very regional and specific to a country. So there are hundreds or even thousands or hundreds of thousands of posts out there anybody can post. So how do we sift through and filter down to something that is actually going to influence an instrument's price and actually have market impact? Mm-hmm. So what Nasdaq is doing, actually working with a number of third-party providers with the expertise in identifying and categorizing specific social media posting dedicated for stocks and these company postings. And then we actually consume their filtered and identified market sensitive announcements or postings, and actually insert that information into a part of our alerting so that we can apply that into our alerts monitoring, or actually provide that information for the surveillance or the compliance team so that they can take action once they see this type of behavior or this type of media posting out there. So this is something that we're working with our customers with, something that is solving a problem that that is more recently growing. So that's a very, very interesting area.
I like that. You're solving a problem. Just playing devil's advocate for a moment. Julian, Grace, is social media still a massive issue on your platforms in your respective parts of the world? And what measures have you potentially taken to battle these kind of challenges? Julian?
Yes, I mean, everyone's a reporter these days, and news spreads like wildfire. We have and that keeps our market surveillance team awake at night as well. But yeah, we have a team, and the team actually looks at markets, those social media postings, whether through our corporate surveillance teams or market surveillance teams. And that's collaboration. I mean, we do share information if need be with the commission and in the industry, our broker firms as well. So that there is that collaboration, and again, going back to that regulatory trust that we talked about, is actually a collaborative authority. You know, we empower people to keep an eye out, to look at it, work together with us, because at the end of the day, we're looking at market integrity. You know, a fair and orderly market, and one can't eyeball everything today. One needs that collaboration. Yes, we have the tools to do it, but nothing beats that phone call and that conversation that we need to have with the oversight regulator as well as the industry itself.
Quick question. I just want to clarify. You said that one can't eyeball the information today. So to clarify, you're automating everything around the monitoring of social media, or is there still some kind of manual intervention?
There is still some kind of manual intervention. I mean, we do leverage on our brokers. They are the front-facing regulator, if I might say so, with their clients and things like that. So we have tools to monitor keywords that we look out for, but there is still that human touch to it that we look at. Yes.
Grace, I mean, is this still a big challenge for you guys in Singapore?
I think likewise, our corporate communication colleagues would also be crawling through social media to look out for keywords, etc., and to alert internally whether it's RegCo or other parts of the SGX. And our surveillance colleagues also make use of that forum to look into cases, to look for hints of any concerns. Of course, with activists, with our retail investors getting more and more active right now, combing through social media, it's an essential task that has to be performed on a daily basis. And with any information that's obtained, we will have to collaborate internally as well as work with our brokers and with the authorities that are involved.
Okay. I mean, just a few, I think it's actually last week. I mean, Japan's JFSA issued guidance on preventing, an Archegos-style incidents. I think from recollection, it was focusing on group-wide soundness, counterparty risk, credit risk, and risk culture. I mean, Grace, I was wondering what lessons, if any, have been learnt from your perspective around these kind of instances? And I guess, more importantly, how have expectations changed for members in the fallout of Archegos, of these types of sagas?
Personal view is that I think the tone at the top is highly critical and building a very risk-sensitive culture across the organization. And I think it's not just in respect of Archegos, but what really struck me as food for thought is having that courage, to escalate risk concerns and make unpopular, difficult risk decisions and press on with it, even if it means pissing off your clients, or even if it means that the chain of command may not have your back. And I think hopefully if everyone has a greater risk awareness or greater risk sensitive culture, there is going to be less friction in resolving risk matters. So I think it's a goal that every organization should work towards, having that great tone at the top. And as for our members, many, if not all, have already conducted reviews of their own internal credit processes following the incident. Some have re-examined their escalation process and conducted more in-depth customer assessment as well as due diligence, while others have relooked the powers under their legal agreements and held more frequent risk hurdles. And we've also articulated some of these measures that our brokers have taken as well as good practices to be adopted in our credit risk guide that was issued last year, just shortly after the incident.
Julian, I mean, anything that you'd like to add, or have the expectations changed after these types of instances?
Well, I think it's just there's a jolt or a reminder to everyone that one needs to actually review. One is the risk and profile of your clients. I mean, the KYC is not only at the point of account opening. As the relationship progresses and evolves, at most times, the legal trading agreements have not caught up, right? So one needs to be mindful to have a look at those documents. It needs to change as the relationship evolves, including revisiting profile agreements, negotiate new terms, just like Grace had alluded to earlier. Our business rules require member firms to have in place the appropriate necessary risk management functions. So we reinforced that. I mean, following Akiko's incident, we had industry communications on remuneration practices. It just reinforces risk management practices of our brokers itself by requiring to cultivate a system that promotes integrity, ethical and prudent behavior in the brokers itself.
Integrity and prudent behavior. I quite like that. I mean, yet again, this could come down to the concept of building better risk cultures. I mean, Grace, do you see technology as, an enabler to better codify sound risk cultures into operations?
Bingo. Yes, that's right. So to me, technology is an enabler. Well, it poses no conflict of interest nor emotion-based kind of judgments, right? And yet it's able to empower people in decision-making and help deliver even better outcomes. And if properly configured and well-tested, it does a great job. But on its own, it can neither build nor promote risk culture. So it really starts, as I said, from the tone at the top. And I strongly believe that every individual in the organization, from the board to the front office and to the last line of defense, holds that key to good risk culture.
Yet again, I understand it's the tone from the top, but for you, what does good look like?
Well, I'm not sure if there's a one-size-fits-all model of good. In my view, being able to withstand crisis, yet still create a sustainable business growth and maintaining stakeholder trust is paramount. So we need to continually be competent in identifying, assessing, mitigating, managing risks, and be prepared to deal with uncertainties in a wide array of potential risks that we've seen, whether it's from geopolitical events or new sanctions, climate change. The list goes on, right? Threats to supply chain, etc.
Okay. Julian, same question to you. I mean, how do you define what good looks like? And what type of steps are you looking for institutions to be codifying better risk cultures into their operations?
Well, one is looking at each its own, right? I mean now we've got more Joe Publics involved in retail and things like that. So looking at our member firms and our brokers, without our continuous engagement with them, they need to find that level themselves. Right, each broker will have its own risk assessment and analysis of it. Integrity, ethical, and prudent behavior, that comes down to the person himself. So if the culture, the tone from the top, exactly, embeds throughout their organization, yes, I mean that's something. I mean, good is highly subjective. It may be good to you, better for some, not good for the others. So every firm needs to find that balance. Depending on the risk profile of their clients and things like that.
So I'd like to look at the flip side of the coin. So if we're going from having a good risk culture, then let's look at the challenges around enforcement and actions against members. I mean, how is technology reshaping decisions to initiate enforcement actions? And I guess more importantly, based on expectations, how do you see the impact of technology in terms of the volumes of potential actions? Is it going to increase or decrease kind of in the short, medium and longer term? Julian?
Well, technology plays a big part on our role as frontline regulators. Although it continues to be an enabler, I would say there's still much room for improvement. No one market is the same. Different markets, different characteristics when it comes to market misconduct. So our capability in detecting irregular trading activities and the ability to swiftly act on them, justice must not only be seen to be done, but it must be done with haste and with speed. And swiftly act on it must be through technology and curating the right reg framework for it. We have an enforcement framework which categorizes a breach to either a less or serious breach, less serious or serious breach, and technology plays a part in it. But I must personally admit that there is, however, much room for improvement in behavioral analytics and relationship modeling to shorten that time process for behavioral and relationship analysis towards building that prima facie referrals. As you know, market manipulation techniques and modus operandi are no longer plain vanilla and have evolved to something very complex. So we continue to look at ways and opportunities to increase our capabilities in these spectrums.
Grace, is technology reshaping the process of initiating or the decisions to initiate an action?
Well, definitely. I think with technology, we can run a lot more data, and data cannot lie. So with that information, with data on hand, we are able to take more appropriate actions and even faster and quicker actions to try and disrupt irregular activities early without having it to move into any sort of enforcement or disciplinary type actions to be taken.
David, as we look to the rest of the year and beyond, from your perspective, where is your focus? Where are the areas that you think we should be looking for the development of our systems? But more importantly, I guess, are there any areas on the horizon that have you concerned?
Not so much a concern, but touching upon a point that Grace and Julian have both mentioned is the human factor in actually doing the task of keeping markets safe and keeping and doing the monitoring of markets. That is very important to us. For Nasdaq, our technology dedicated for anti-financial crime, we have thousands of users currently using our system. The key factor is actually the technology is there. We provide and enable the ability to do the role of keeping markets safe and doing the surveillance aspects, but really is making sure the technology is easy to use, making sure that when there is somebody joining the surveillance team or the compliance team, that they can quickly understand and pick up and do the investigation and really carry out the task of protecting the market. So for us, we continue to focus on that. We have the technology, we have the tools there. It really is making sure it's easy to use and providing the training to ensure that people understand the various types of very, very complex market manipulation techniques, and providing that type of information so that people can do the task of really the job of doing the compliance and surveillance job. So for us, we continue to focus on that, and what else is really taking in more data so that we can provide a more accurate view as to what the market is, what influencing factors are happening in the market. So definitely this is a ever continuous task of adding more and more information into our system and providing better and better accuracy of alerts.
No, it makes perfect sense. You made me smile for a moment because I was thinking, oh, he's going to be talking about user experience. That's kind of a retail thing that everybody does, but it makes sense, right? So when you look at the kind of more of the core infrastructure, they are very complex processes, and it's simplifying it. So it's more about just getting the job done versus having to keep continually relearn things. I mean, you mentioned at the very, very start kind of how you're expanding into new asset classes and products. I think you even mentioned carbon and things like that. When you look at surveillance, the underlying algos, are they working the same way, or are you having to rebuild them from scratch?
Well, from our perspective, trading is very similar, even across the various product classes that we already covered. So once we break out into carbon trading or tokenized assets, digital assets trading, a lot of what we've seen is that the manipulation techniques across the board is similar, right? And in particular for, say, the crypto markets, where many of these exchanges are not supervised. It's unregulated. And a lot of the manipulation that we've seen has taken place in these marketplaces. And it's not good for the end investor. And I hope that eventually there will be protection for investors in such marketplaces. But definitely across the board, irrespective of the underlying instruments that trade, we definitely detect and see manipulation. The same.
You mentioned that. No, it makes sense. You mentioned that they're similar in terms of the types of manipulation. Is that because they're the same bad actors, or it's because they're learning from each other?
We don't really know who the end participant is. That would be a hard guess. But definitely it's not like there's a manipulation textbook that people open up and see and copy. Really, some of the very, very, I guess, the simple types of manipulation taking place is just happening because no one's looking at it. No one's really focusing and stopping that from taking place. So it's lowest hanging fruit, even if you are a bad actor. So I guess that's what's happening in these particular marketplaces.
I mean, that's a core competitive advantage of a bad actor, right? It's their ability to respond faster than you guys, right? That's what they do brilliantly. And not that I'm kind of saying they're awesome and stuff like that, but it is their core competitive advantage. I mean, Julian, as you look to next 12 to 18 months for you, where are the priorities and anything that has you concerned on the horizon?
Well, RegTech is a journey. We've come a long way to this stage of regulatory compliance in our industry. Exchanges throughout the world, I mean, bad actor or otherwise, they're always one step ahead of us somehow. But we've proven time and time again that we're resilient in adapting to changes. Good practices have evolved with greater awareness, the appreciation of the importance of good governance and market integrity. I think the investment by firms in RegTech overall sends that clear message that industry acknowledges that technology is a driver towards continuous good governance and mitigating risks and exposures to that risk. Company businesses of the 21st century. With greater awareness, I think, comes greater collaboration, which will see the building and growth of that ecosystem that we're talking about, which will then shape the future of our financial markets. Regulators, we know the importance of driving and accelerating collaboration and building of that ecosystem. So that continued momentum, I think, must happen. Otherwise, that momentum for change cannot be sustained. I think it is important in the next 12, 18 months that it is crucial that we keep the industry engaged and aware of things that needs to be done or can be done or and things like that, Brad.
Okay, it makes perfect sense. Just a quick question. You mentioned collaboration. Now, that's more kind of with the members and the market participants, or you're looking cross-border collaboration?
Oh, our collaboration is not just with our Securities Commission, but the collaboration is throughout with the industry itself. All participants, everyone that's involved with the exchange, internally and externally itself. Only then and then you get the depth of that knowledge and the breadth of the understanding of what needs to be done.
Okay, makes sense. Grace, likewise, next 12 to 18 months, where's your focus? Any concerns on the horizon for you?
I think for us, as I mentioned right up front as well, the markets are highly unpredictable. Interest rates are rising. Historical playbooks are no longer relevant. So we need to always remain vigilant. And so for us, we will continue to actively engage our brokers on their controls, the exposures. We have to act sensibly, responsibly, and make hard decisions where necessary to build a really sustainable marketplace. And as we all are cognizant of, cyber is an area that requires constant attention. So as more and more firms come on board that offer digital solutions, the risk of cyber threats and scams will continue to increase. So I think we can never over prepare for cyber, and we'll just continually run drills and exercise and make sure our playbooks are up and constantly updated.
I like that. You can never really prepare, but it sounds like the bad actors are keeping you guys young, right? Flexible and on the balls of your feet. Well, with that, unfortunately, we're out of time. I'd like to thank our panel of experts, Julian Hashim, Chief Regulatory Officer of Bursa of Malaysia, David Kwan, Head of Nasdaq Market Surveillance Smarts Asia Pacific with Nasdaq, and last but not least, Ms. Grace Mock, Senior VP, Head of Member Supervision with the SGX RegCo. Thank you all for sharing your expertise and insights with us this afternoon.
Thank you.
Pleasure. Thank you, Brett. Thank you.